Yo, what's going on, everyone? So you've been requesting me to make some YouTube content, so we'll give it a go. The production might not be the greatest, but that's fine. We'll learn as we go on. Um, but the goal of this is pretty much to put you as either someone who's learning or just trying to improve as you go along as a trader. Put you in the best positions to do so. Just talking from my experience. With this one, we'll do like a revamp of the beginner rules for traders, ones that I created simply from coming into the game, not having experience, losing money, and learning the hard way. So it's essentially a book of rules that I made very early on, and I think still relevant to this day. So we'll talk through them now. Rule one is the entry logical and why now? Um, this is a simple one. Why are we entering this position, and does it make sense for us to be entering this position, right? So when we look at this chart, for example, right, Near has been one of the better performers in the market at the moment. There was a lot of signals or signs that this could perform well with the trend that was happening. Simply put, we can see here the range it had and then the constant grind up. I'm not going to go into the advanced details, but clearly there was a TWAP running here. We won't get into that, but what we can do is look at simply the 3-day and say the RSI was ready to make a move along with a 3-day retest of this key level here around the 9.5 level, right? Given the levels we can see here, from previous price action, whether it be rejection, turning into support, whatever, there's been enough data to suggest that this could be a key level for continuation if we hold. RSI bouncing on the 50 as well, saying, look, I'm ready to make a move potentially. Now, in confluence with that, we have the 4-hour that says, all right, where can I get an entry, right? I want to get in this coin, but I don't want to just buy for no reason, right? That came here. And if you've watched me before, you know how I like the little SR flips with a trigger. And that trigger came here with the 4-hour essentially. And this was at a time when the market was selling off. We had a nice flip of this with the close being very good in the end. The 4-hour candle closed above this flip here. We continuously made an uptrend. We didn't break down. So then you could say, is this a logical reason for me to enter, right? And I would say yes. We had the RSI on the 50 level as well. So a nice retest on the 50 level to say, look, let's bounce here. So that's a double reasoning there, double confluence. Now, it's better than just entering here for no reason other than the fact that the coin's bullish and you believe that it could go to potentially 16, right, which was the target. Because if you enter here, automatically you're falling underwater, whether that you have to cut because you're panicking or whatever, right? It was just not a logical entry to be entering up here. We have to wait for something to let us in, and this was that point there. And it's about doing that consistently. After a series of wins, a lot of people start to forget the rules and have a strategy in place to take positions. So this would be an example, right, of just being patient. All right, if you didn't get an entry on 9.5, but you waited, price grinded up and eventually gave you a decent trigger here at near the 11 area along with the 50 RSI. So it's a double confluence to say, look, I can go in here. My stop is under here potentially. First target is probably going to be up near the 13 area. But overall, given the 3-day chart, we're looking at a 45% move and like a 2% stop potentially. And that's the kind of risk reward we like taking. Next one is your stop loss pre-planned? And on this case, it's a perfect example. Our stop loss is simply under this price action here where strength was shown. Strength was shown because buyers stepped in on the fall below this little SR flip here where the 50 on the RSI kicked in. We don't want to be going below this now before we get a move essentially up here, right? So automatically our invalidation is pre-planned. We know how much we can lose and we are happy to take this position. You should not be going into a trade without having your loss planned. In your head, you should be prepared to take that loss. And if you don't, it's a bonus, right? That's part of trading. You take losses all the time. You're not going to have like this stupidly high positive win rate. It's not realistic, right? You've got to be happy with the losses that you're going to take and hope that your plan plays out consistently over time. Next one is leverage. Why are you using leverage? What leverage are you using? Do you understand position sizing? A lot of people in this market seem to have this wild assumption that the higher leverage, the higher the money they will earn. It's the complete opposite. If you do not understand position sizing or what leverage is and when it should be used, please just stick to spot, okay? It's a tool that can be used in strong trends or not even so much strong trends, because a lot of people in strong trends would be better off just sitting on their hands and letting their positions play out. If you do not understand when to use leverage, just stick with spot. Spot is absolutely fine in the crypto game. You are seeing percentage swings higher than anything you'll see in the world, right? There is not a better market to capture percentage swings on your money than crypto. So please, if you do not understand leverage and position sizing, just avoid it for now. Learn the basics and build from there. Next one is sensible portfolio percentage on your positions. How much are you risking? This is like number one, essentially. Risk management is number one because everyone knows they should be using it and do not. How much are you putting of your portfolio on these positions? Like, is it 10, 20, 50, 100%? Then you might need to reassess. And I'm not saying there will be times where you can bet big, and I'm not saying 100%, but there will be times in the game, and it usually comes from having experience when you know that you can go risk on at 10, 15, 20%. Now, for the most part on these trades, you shouldn't be risking more than 1%, 2%. You know, your aim of the game is to have skin in the game and be consistent. If you can do that, then the odds are in your favour. Given how much this market pays out, it's in your favour. But I am telling you now, if you do not respect risk management, it will take it from you twice as fast. Twice as fast. This market is easy come and easier go. So just keep that in mind. If your risk management is good, you're always in a greater position than the majority of this market to do well. Next one is risk reward, which we've kind of covered. But what is the risk reward on your bets? And this is controversial because you're not always going to get great risk rewards, but you might have conviction in a setup playing out that is 1-to-1 or 2-to-1. For me, the type of trading I like to take is 3-to-1 and above, 5-to-1. You know, I would say put those in your favour for now until you really understand when the right time of betting is. Focus on good risk reward positions until you really have enough experience in the game to understand when is the right time to take a 1-for-1, for example. And that will come, later on. Next one is, I guess, FOMO, as you call it, fear of missing out. And, essentially, it's not acceptable unless there's an analysis first. And there will be times where jumping in can work. We've seen it on the last few days where coins are going 150% and people are shorting them at 50%, right? Thinking that they're going to catch these tops and the coin keeps ripping. For the most part, try to avoid jumping into positions until you have a strict analysis on it, and again an invalidation of that position. Don't start chasing red and green candles without a plan first, okay? Because a lot of people do that, and then next thing you know, price reverts 10% on them, they get wiped and they wonder what the hell happened, all right? Please avoid that at all costs until you have enough experience understanding price action, understanding when and when not to jump into these positions. Panic selling as well is another one. A lot of people create plans that would work and they do not stick to them simply because they have too much at risk. They have too much at risk on these positions. It plays with their mind state, and then they start cutting, chopping, exiting back in these positions when the trade would have just been fine to leave. If you are doing that, you are ruining your confidence as a trader. My recommendation would be size down completely, couple of dollars on a position, get comfortable with playing out your ideas, your positions. See what happens when you take that idea of a small amount compared to the amount you're usually doing when you're essentially over betting, and start to build that confidence as a trader more so than worrying about money. Keep doing that consistently. Your ideas build confidence, and then slowly start to add on a little bit more on these positions to a normal position size, and see then how your mind state is when you're in those positions. Are you still feeling the same emotionally? Are you emotionally attached to these positions? And go from there. But my recommendation is if that's you and you can't step away from a position, then you should be sizing down dramatically. Take profits on the way up. Now, this is something I spoke about. Some people buy a coin with a plan. They have these profit areas that they're planning to take, but it happens faster than they expect. They could have a 3-month plan for this position, right? Which is unusual for the most part, but a 3-month period for this investment. What happens is it happens in 1 month. Because it happened in 1 month, they have this assumption that it creates a stronger narrative for the coin, that I'm not going to sell now because it happened in 1 month instead of 3. I'm not going to take profits, I am holding. Then what happens is 1 month later, that position is now 30% lower than their take profit, and they wondered why they did not take profits. Have a plan, take profits on the way up, and stick to it. Do not marry your bias on these positions, because what will happen is it will happen once and it will work. But now, after that, you will keep doing it. You will make that mistake of keep marrying this bias for a position, and it will grind your balance down. I've seen it happen so many times where one coin treats you very well and you become almost married to it, and that it will always treat you like that. This market is very unforgiving if you do that, and at some point it will take away them gains. So please, on the way up, take profits. Now, if you're in leverage positions, and I try to treat spot the same as leverage, but if you flipped a key level of your trade, you've now made an SR on a higher level, move your stops up, because you don't want to be losing that level in the future, because then that's an invalidation of that level. It's showing weakness, and then it's going to fizzle potentially all the way back down to your entry. If a flip is made, move your stops up to an invalidation below that, and then move on from the trade. Let it run. If it fizzles below that entry and stops you out, fine. Wait for another time. That's what I would recommend, because a lot of people do not do that. They don't take profits. They don't move stops. They see positions move all the way up and then fizzle back down. And a good way to counteract that is, if you've got take profit points, take the profits. Great. Leave 10% of a moon bag in. If you're someone like that who has that craving to see how much a position can run, then keep 5-10% of that position in, let it run, put your stops break even or whatever, let that run and let that do its course, but make sure you take profits on the way up. They're pretty much the basic rules I can give you, and these are the complete basics. And we do go into advanced things on my stream, and we will start going more advanced in the YouTube comment down the line, in the YouTube videos down the line. But give me a chance, let me ease in, essentially, and we'll take it from there. But yeah, if you like the video, let me know. Obviously, feedback is appreciated. Like the comment, and just let me know what I could do better, and hopefully this is helpful to you guys. Have a nice day.